Not only are there some amazing deals out there in the condo market right now, but it's actually way easier to get your foot into the market with such a small down payment compared to what most people actually think you need to put down. I'm Bawanka with the Compass team.
And my name is Charles Kayitaba, mortgage broker with The Money Man.
And what we're going to be talking about today is how you're going to be able to purchase a home and get it at a low price, or basically a low down payment, and a lot of things about creative financing that just the majority of people don't know. And that's why we brought in Charles today, because Charles is the money specialist and he's the one who can make a lot of things happen that the majority of people don't really know about. So we're going to dive into it. We're going to get into it right away. Charles, what everybody wants to know, and I've heard this a lot and people can't even fathom or even believe that it's possible. If someone's buying a property, 500,000, and yes, there's a lot of $500,000 condos out there, how much money out of their pocket do they need to be able to put down to be able to own this asset?
All right, beautiful. So great question, right? So going off the example of a $500,000 condo, right? So in Canada, the minimum down payment you can put down on any property is 5% up to 500. So that's 25 grand right there for the down payment, right? But naturally there are closing costs and miscellaneous costs that we have to incorporate. Land transfer tax, lawyer fees, and some of these miscellaneous closing costs that we need to bring to the closing table. If you're purchasing in Toronto, all right, you should adjust for approximately 2%, all right, of the overall purchase price
In the city of Toronto.
in the city of Toronto, because
Okay.
we have what's called the double land transfer tax, right? So in the city of Toronto, you should probably expect to pay anywhere between 10 grand, all right, 10 to 15 grand, depending on the size of the purchase, all right, all in.
Let's just go off of a $500,000 property.
So $500,000, all right. We have $2,500 for lawyer fees, all right, ballpark. If you are land transfer tax will range in and around, all right, just under 10,000. Now, obviously, if you're a first-time home buyer, you do get the rebate of $4,400, all right.
Okay.
So rebate being at the closing table, the lawyer will deduct 4,400 from that land transfer tax. So now you're sitting in and around 5K, right? Plus now the insurance premium if you're putting less than 20% down, which will range around 1,500 to 2 grand. So all in to bring to the closing table, you're only looking anywhere between 10 to 12,000 when you all add it together, on top of your 25K. So all in, you should expect to bring in around 35,000.
35, 37,000. Okay. Now, this is what's new. We're not learning anything new here. We already know this. No worries. Okay. So now let's talk about some creative financing, some cashback options that some of the lenders have out there. And even let us know, how many lenders do you currently work with?
Yeah, so as a mortgage professional, mortgage advisor in Canada, we have access to over 100 different lenders, all right? A lender specifically, or what's considered under the A umbrella, most people think it's just five, which is what? BMO, RBC, TD, CIBC, and who am I missing here? National Bank, right? But there are a plethora of different A lenders called monoline lenders. So all in total, we work with over maybe 20 to 30 different A lending institutions, all offering specialized products, right?
So talk to us about some cashback options.
Perfect. One of the main products I've been using right now and that we've had a lot of success with our own personal clients is the cashback offer, right? The reason why I love the cashback is because, unfortunately, let's call it what it is, over COVID, a lot of people have racked up a little bit of debt. But that should not delay or stall their home ownership journey, right? Now with the cashback promo, depending on the bank, will offer anywhere between 1, 2, and 3% of the overall mortgage amount back to the buyer in cash on the day of closing. That cash can be used to pay off debts, pay off lines of credits, maybe a car note that would have been stopping you from qualifying for the mortgage if it wasn't there. So not only are they able to get cash in hand to pay off debts, but they'll also still be able to get approved for the mortgage that they want.
Yeah. So no, I think this is it's a huge benefit, because the number one thing, we talk about it all the time, is getting your foot in the door, is having the down payment. So now if you know that you have the down payment, but it's going to put you in a tight spot,
Correct.
At least knowing you can get 1, 2, or 3% cash back, that makes life a whole lot easier. So now let's do the math, because recently we had a client that we worked with and we were able to get 3% cash back. So what's the math on if someone's buying, put down 5% plus the closing costs in Toronto minus the 3%? What are we looking at?
So if they're putting $25,000, all right, on a $500,000 property, call it they're mortgaging $475,000, right? So with the insurance premium that's in there of approximately about $22,000, you're back up to $500,000 that you're mortgaging anyways. So just to make life easy, let's just say $500,000.
Okay.
With a 3% cash back, you're getting $15,000 back in cash day of closing. That $15,000 can go towards, like I said, paying off credit cards, lines of credits, any excess debt that you need in order to qualify for that mortgage.
Yeah. So now we said it's going to cost roughly $3,500 to $37,000. Let's even just say it costs $40,000 to purchase this property. With that $15K cash back, now you're looking at $25,000.
Correct, because you can also put it towards closing costs if you really wanted to. Let's say you didn't have debt to pay off, right? And you could have qualified the mortgage. Well, you can put it towards closing costs, your lawyer fees, your land transfer tax, which is requiring you to bring less to the closing table. So it's almost as if you only have to pay the down payment.
So basically, yeah, you can buy a property for $25,000. You can buy a property for $25,000. That's a $500,000 property. Now the next question that someone is going to ask is, okay, yeah, I can come out. I got $25,000. I'm ready to buy, but how much money do I need to be making every year, or what how much money do I need to be making yearly to be able to afford this $500,000 property?
Right. Really good question. So approximately $500,000 property, let's say condo fees in the GTA $450, right?
Yeah.
That's you can most likely qualify for a mortgage that amount, for a property that amount, putting the minimum down in and around, call it $90,000 to $100,000 in annual income, right? Now that doesn't has to be you personally making $90,000 to $100,000. I'm saying the overall income on the application. So if it's you and a significant other as well, right? 50-50.
Okay. So what about some people, I don't have a significant other, it's just me, myself, and my parents already own a property, but one of my parents is going to be okay to co-sign, and I make $70,000 and my parent makes $90,000. How would that work?
Yeah, so the same thing, would apply, right? Because they're co-signing, all right, and we're saying it's your first home, right? They're allowed to do that, right? And naturally, their other mortgages would be taken into consideration. But most parents don't have, especially if they own the property for a long time, we're not expecting them to have a $2 million mortgage or $1 million mortgage. It's probably been paid down, right? But with those two strong of incomes, there's more than enough wiggle room to qualify for both.
So even if you're someone who only makes $70,000, but you got $25,000 that you can put down, as long as you have someone to co-sign, you should be good to be able to move forward with this.
Yeah, 1,000%, right? Obviously, again, there's ancillary things that we need to take into consideration, credit scores and whatnot that are important to the application, right? Yeah. But we've never had an issue where someone co-signing was a problem.
Okay. And I know you said there's some other incentives that are out there. What are some of these other incentives other than the 1%, 2%, 3% cash back? Yeah,
so outside of this, the one main one that I use a lot for first-time home buyers is to eliminate their car finance or lease finance.
How do you do that?
So essentially with some of the A lenders, all right, if your car note is, let's say, 6 months away from being paid off in full, they will say, hey, no worries, it's almost done. We'll remove this calculation from your debt. So they'll completely wash it away.
Oh, nice. And then that gets put into the mortgage.
Correct. Because on average, for every $500 car note that you pay, you're looking in this market around $90,000 to $100,000 less in mortgage approval.
When you keep saying car note, just so people can understand, what do you mean? Just like your monthly payment?
Your monthly payment on your car.
Okay.
Correct. Okay. So for every $500 car payment that you make, you're looking at your mortgage approval to decrease by $100,000.
Okay. $500 equals $100,000.
You got it.
On the payment. Okay.
Right? So you can imagine someone who's now qualified for a $400,000 mortgage, but their car is almost paid off, being able to remove that from the application. Now they're being qualified for a $500,000 mortgage. that asset class is completely different. Obviously, you being a realtor, you're much happier about that because you have so much more flexibility in terms of what they can actually go out and get.
Yeah, yeah. And one thing I would say too is like, it's very good. I like that you've kind of touched on everything, and you should kind of show people if you want to buy a $500,000 property, even more. But we're just doing it just to make the numbers easy for you. One thing that I run into a lot is sometimes people will say, "Oh, I just started this new job, but I've been working for a long time. I just started this new job, or I don't know if I'm going to be able to qualify, and I'm also worried about like, is it going to be a hard check? Is it going to be a soft inquiry?" I think these are some of the biggest issues that people kind of run into and think about along the way. So can you answer these? Like, let's go one by one. So first one is employment. Like, I've just started I've been working for a long time and I just went to a different job. Do I have to wait 2 years? I've heard I have to wait 2 years until I can buy a property.
Yeah, no, not at all. That's probably one of the biggest myths that are out there, right? We've gotten people approved who just started the job, haven't even received a paycheck yet. Right?
Wow, okay.
The reason being is what banks really want to look at is industry experience. So, for example, if you graduated from university as a, I don't know, mechanic, and you get a job as a mechanic, in their eyes, you have 5 years of experience within this industry. Or if you leave one industry, all right, and you maybe leave to another job that's going to pay you more, so it's a vertical advancement in your career, they're not going to penalize you for accepting more money.
So the biggest thing is it needs to be in the same industry.
That's the biggest thing, right? Yeah. Now, if you are, call it, let's say it's not in the same industry, right? You make a career switch, completely different industry, no problem. You don't have to wait 2 years. You just have to be done your probationary period. And depending on the strength of the overall application, credit score, down payment, they may not even care even if you're still in your probationary period.
Okay, that's good to know. That's really, really good to know. What's going to be another common question or hurdle that people are going to run into?
I think it's the hard check one that you mentioned.
The hard check one. This one we always hear about. So talk about that one.
So there's a lot of miseducation around your credit score and your credit score being checked, right? Naturally, when you're doing pre-approval, it is a hard check. But if you're an individual, right? If it's just one hard check, it doesn't do anything to your credit score. You're not going to see your credit score drop by 50 or 60 or 70 points. No. The issue that happens is if you have multiple inquiries all at the same time. So if you are shopping around at multiple different brokers,
if you're going to different lenders,
different lenders, or you're working with different brokers, that's when you'll start seeing multiple different checks. And when you get repetitive checks hit against your credit score, that's when you may see a drop.
Okay.
Right? And that further incentivizes why you want to naturally work with one professional, because what happens is as a mortgage advisor, when I pull your credit and I check it, all right, and I submit it to multiple different banks, they're going off of what I pulled. They're not individually pulling your credit score.
Yeah. That's one of the advantages of working with a mortgage broker as opposed to just walking into TD Bank and just some random guy sitting there at the laptop waiting for you to come in. So I think there's definitely a lot. I always tell any of our clients all the time, you always want to be working with a specialized mortgage broker, because not only do they have that same option of TD, but you guys also have so many other options as well.
You got it.
And you never know what's going to be the best option for you.
You got it.
So self-employed people. Now this is another thing that we're always people say, I'm self-employed. Maybe I don't show as much income, but I make a lot of money, so I don't think I can buy. Am I able to buy?
1,000%. And you're even able to buy with less than 20% down with an A lender, right? So again, what happens is there are specialized programs that the insurer offers, all right? One of my favorite programs is called Business for Self-Stated Income. Now, what does a stated income mean? Essentially what they'll do is they'll take at 6 months bank statements, all right? And as long as the gross deposits, right? Let's say, for example, we have a plumber who's self-employed, right? Because plumbers and blue-collar jobs tend to don't show a lot, right? Let's say you make $200K a year in the business, right? But you only show $50,000, which is common, right? In the 6 months, if I can show that you're gonna make 200,000, but you only need, call it $100,000 to qualify for the mortgage that you want, for the property that you want, as long as it's no more than 2.5x of what you're showing on your notice of assessment. So if the notice of assessment is 50, as long as it doesn't surpass 2.5 times, they'll give you the mortgage.
Okay. Okay.
And that's just bank statements. That's it.
Yeah. Yeah. Okay. No, this has been really good. I hope there's a lot of things that first-time home buyers are getting from this. We have another video that we're talking about if you're buying as an investor first, or if you're going to be buying as buying as an investor first and then getting your principal residence. Even with a lot of these, you're able to get something like probably my favorite investment. That's going to be a Airbnb condo, which costs roughly $500,000. If you want to know more about that, just click the link below and we can set up something called a discovery call. And from there, we can dive into it a lot deeper. But let's keep talking to first-time home buyers.
Yep.
And what would you say is probably your number one piece of advice for someone who's a first-time home buyer and they haven't talked to a mortgage broker yet, and maybe they just don't think they're ready, but actually they are ready? What would you say to them?
Yeah, I would say don't count yourself out so early, right? That's the biggest thing that I see, because you don't know what you don't know. Ignorance is bliss, right? And you'd be surprised how many people are like, oh, I'm actually closer than what I actually thought, right? In terms of buying a house. Something tactical to do, I would say avoid the car notes and avoid racking up personal debt, right? Just by that alone will get you into the market much faster.
Okay. And where can people find you?
Yeah, you can find me on Instagram at _CK the broker. That's probably the easiest way to get in contact with me. And then from there, I have my Calendly link and I have all my contact details.
Okay, perfect. Okay, well, that's it for today, first-time home buyers. We hope you got a lot out of this. If you know somebody who's thinking about buying and they don't think they're ready, share this video with them, send it to them. I'm Bawanka with the Compass team.
Charles Kayitaba again with the Money Mint.
And we're looking forward to seeing you guys on the next one.